Good evening, all. It's Sunday night. This is our free weekly newsletter, ShogunTrading.com. And there's a specific reason why I'm sending this out tonight. The market did break support on Friday, and this is unprecedented. We have a financial situation right now that personally I've never seen before. I don't think anybody's ever seen this before. So where's the market going? This is a chart of the S&P 500 on a daily basis. This is something you need to be aware of. This was the lows, the November collapse lows. It was absolutely everything. Everything fell apart. Well, we broke them. The low was 741. We're sitting at 735 right now. The market actually on Friday closed at the low. As a matter of fact, the S&P 500 futures are down another 9 points as I speak overnight, which means we're going to go down another 9 points. So where are we going? Let's consult the monthly chart. As you see the monthly chart, we broke these lows. We broke these lows as well. These are the lows after September 11th, and we're diving. There is some support right around here at 682. There is more support right here at 488. That's how far down the market can go, and that's very, very dangerous. So why is the market going down? I am not going into the political speech right now because it's not my place to be political. But the market does not like what it's seeing. Higher taxes and more welfare does not make a market good. And that's why the market is falling apart right now. We have an economic slowdown. We have a recession. We have people just walking away from responsibilities. We have people walking away from everything, and it's not good. We have humongous deficits coming up, humongous raises in taxes, and so on. So what are you going to do about it? What are you going to do about it? And this is up to you. Are you going to give up? Are you going to throw your hands up and say, you know what, I'm just going to, I'm in for the ride. I had a conversation with a bunch of people on a couple of nights ago, and we're sitting around the dinner table, and they said, every time I contribute into my 401k, by the time my contribution hits, I already lost the money. Their 401k is going down so fast. They say that their 401k is just absolutely falling apart. And they say, well, you know what? It's too late to sell. It's too late. I'm in for the ride. It's never too late to sell. It is never too late to take action. Here's the reason why. Let's say that you bought a stock. Let's take, for example, Citibank. That's seems to be the talk of the town right now, Citibank. And Citibank, you own Citibank at $50, and Citibank right now is sitting at $1.50. What you have to ask yourself is you have to always look at your positions as a new position. Is this the right time to buy Citibank? Would you go buy Citibank right now? Well, if you were in for the ride and you say, you know what, I'm in for the ride, 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 at any point in time like that, it was not too late to sell. When is too late to sell? At zero. At zero, hold on to it. If your stock is sitting at zero, use it as wallpaper or hang on to it. But until it's down to zero, you always have to ask yourself, is it a good buy here? Is it a good buy here? Is it a good buy here? And if it's not a good buy, it's not a good hold. That's really the rule. We always exit a position when the reason for the entry no longer exists. That's the only rule we live by as far as exits. So what I want you to do is I want you to take control. Control over your portfolio, control over your investment. So what do? If you look at, you see, Citibank is just falling apart. It's hitting lows, and it's making deals with the government. AIG has more bailout and so on. I looking at the S&P 500. And I'm seeing the S&P 500 going down. I'm seeing the Dow Jones Industrial Average going down quite a bit. As a matter of fact, let's spend a little time looking at the Dow Jones on a monthly basis. And this was support over here of 71.97. The low for this month is 70.33. So we still have plenty to go down. So what are you going to do? Well, I suggest looking at the indexes themselves. You have the diamonds. You have the spiders. You have the QQQ, enough Qs, over here. And all of them represent the market. You can go short on these indexes. I'll give you an example. We went long on the SDS. SDS is an ultra short S&P 500 Pro Shares. It's an ETF. It's a fund that shorts the market double. It's an ultra short. And what allows us to do is it allows us to actually go across the market, across the board, avoid stocks altogether, just go for the funds. And while the stock market is going down, we're able to make money by betting against it. And that works pretty well. Yes, I'm an American. I want to see the market go up. I want to see the market go straight up. I wish the Dow Jones was at 40,000 right now, but it's not. It's coming down, and it's up to us to take the initiative and protect ourselves and benefit from it. And that's what it's doing right now. So from 87 it went up to 98. It's 10 points. It's nice. It's an easy trade. It is something that you can do in order to protect your portfolio. Even if you have your 401k and everything along those lines, you still want to protect yourself against it. And you can hedge yourself by actually buying something like the SDS or shorting the QQQQ or shorting the diamonds or shorting the diamonds, the spiders. I'll give you a perfect example of this. Here is a weekly chart of the home builders. This is Spider and S&P 500 S&P home builders, and you can see how it came down. So what we did is we went short on the home builders, and we rode them all the way down. So let's say you have real estate and you own real estate, and most of us do, and the real estate prices are going down. You can watch the real estate prices going down, or you can go short the home builders, for example, and you're doing pretty well. It's the same thing with the oil. If oil prices are going up, you go along with the oil. If gold prices are going up, you go long on gold. Speaking of gold, here's GLD. This one is very interesting. It follows the gold basically 1 to 1, actually 1 to 10. It bounced off the $100 level and coming down. I don't believe that gold is what to own right now unless it breaks the 1,000 again. Unless the GLD breaks the 100, then I would look at gold, but not until then. I don't believe the hype. I don't buy the hype right now at all, as far as that's concerned. But I would protect myself against the market indexes themselves. I think that is your best bet right now. Why am I not doing individual stocks right now? Because individual stocks by themselves are very, very choppy right now. There's a ton of noise out there. There's a ton of gaps, and because of all the gaps, it makes it very, very difficult to hang on to individual stocks. They're still doing pretty well for us. I mean, we had. Let me switch over to daily chart. You have stocks like MGM, Casino, because they're so highly leveraged. We went. I'll do it 60-minute chart so you can really see it, because it really has to be zoomed in. From the 788 level all the way down to the 333 is where it came down. And the reason why is because the casinos are so highly leveraged. We also did some of the insurers, AFL, from the 2007 down to the $15 level, and so on. But there's so much noise in them that right now our focus is on ETFs, at least for the next week. I want to see what comes out. I want to see them trying to save the market. I want to see them coming out with news that will actually motivate people, will tell them, listen, you work hard, you get paid. You don't work hard, you don't get paid. We're not going to raise your taxes. We are going to support investments. We're going to support business. We're going to support growth. I really want to see that coming. I really want to see what kind of surprise comes out this week. But if there's no surprise that comes, if a surprise does not come, we definitely want to make sure that we are on the short side with the market, and we are protecting ourselves against what could be absolutely historic. Anyway, I hope this inspires you to take control over your portfolio, evaluate it, protect yourself, hedge yourself, and be ready. I hope I'm wrong. I hope the market goes straight back up. I really do. But if it's not, we have to protect ourselves. Anyway, have a great night. Have a great week. We are trading on a daily basis. If you need any help, we're there for you. Take care.